हेलो एवरीवन। कैसे हो आप सब गाइस। आज हम आ चुके हैं हमारे 34th वीडियो पे। और गाइस आज हम ना बहुत इंटरेस्टिंग पैरामीटर्स के बारे में या बहुत इंटरेस्टिंग टर्मिनोलॉजीज के बारे में हम डिस्कस करेंगे। तो इस लास्ट वीडियो में हमने ऑलरेडी मार्केट वैल्यू इंट्रिंसिक वैल्यू को समझा है, बट अब वो दोनों के बीच में डिफरेंस क्या है, अब इस वीडियो में हम वो एकदम डिटेल में समझने वाले हैं। तो चलिए शुरू करते हैं। मार्केट वैल्यू वर्सेस इंट्रिंसिक वैल्यू इन इक्विटी इन्वेस्टिंग। Therefore, there are two distinct notions of value and price. Okay, चलिए देखते हैं। Intrinsic value is the estimated value per equity share based on the future earnings potential of a company. ठीक है, इंट्रेंसिक वैल्यू क्या होता है? ये एस्टिमेटेड वैल्यू होती है पर इक्विटी शेयर की, बेस्ड ऑन किस पे बेस्ड होती है? फ्यूचर अर्निंग पोटेंशियल ऑफ अ कंपनी। एंड मार्केट प्राइस क्या है? मार्केट प्राइस इज द प्राइस एट विच द शेयर्स traded in the stock market, taking into account several factors including various estimates of intrinsic value. Intrinsic value may be equal to or less than or more than the market price at any point of time. राइट, ये हमेशा होता रहता है। कभी ऐसा होता है कुछ कंपनीज अंडर वैल्यूड हो जाती है, कुछ ओवर वैल्यूड हो जाते हैं, राइट। तो ये हमेशा चेंज होता रहता है। सो एक्सप्लेन इन लेमन लैंग्वेज विथ एग्जाम्पल। चलिए, imagine you are deciding whether to buy a second hand car. Intrinsic value, this is what the car is actually worth. Okay, this is what the car is actually worth to you based on its features, conditions, mileage, and potential to serve you well in the future. For example, after checking the car's engines, tires, and comfort level, you decide it's worth rupees 4 lakh because that's what you would pay for its usefulness and future reliability. What is market price? Okay, this is the current price tag of the car, which depends on demand, competition, or how much the seller believes it's worth. Suppose the seller lists the car for 4.5 lakhs. Now, if market value इज इक्वल्स टू इंट्रेंसिक वैल्यू 4 लाख। ओके, अगर मार्केट प्राइस और इंट्रेंसिक वैल्यू दोनों सेम है तो हम कहेंगे द कार प्राइस इज फेयर एंड यू आर गेटिंग व्हाट इट्स वर्थ। आप उसको उसके एक्चुअल प्राइस पे खरीद रहे हो। इफ मार्केट प्राइस इज मोर देन द इंट्रेंसिक वैल्यू, जैसे इस केस में मार्केट प्राइस इज 4.5 लाख एंड कार का जो हमने वर्थ निकाला है दैट इज 4 लाख, the car is overpriced compared to its actual worth, so it may not be a good buy. Third option, market price is less than the intrinsic value। मतलब मार्केट वो कार अवेलेबल है 3.5 लाख पे, वर्सेस हमने जो उसकी वर्थ निकाली दैट इज 4 लाख रुपीज। द कार इज अ बार्गेन बिकॉज यू आर गेटिंग इट फॉर लेस देन इट्स रियल वर्थ। Same thing in stocks. The intrinsic value of the share is like the car's actual worth. It's calculated by analyzing the company's future profit potentials and risks. The market price of a share is how much it's trading for on the stock market, influenced by investor sentiment, news, and market conditions. Example, a company's stock has an intrinsic value of 100 per share based on its growth potential. But due to hype or bad news, its market price may be 120. If there is a hype about that stock, market price could be 120, that is overpriced, or it could be 80 rupees because of bad news, so the stock price is undervalued. Smart investors aim to buy when market price is less than the intrinsic value and sell when market price is more than the intrinsic value. Okay, so that is the difference between intrinsic value and market value. Intrinsic value is the actual worth of that product, and market value is how the market have given the price tag to that product. Then आगे और समझते हैं। If the intrinsic value is perceived to be more than the market value, okay, intrinsic value ज़्यादा है, market value कम है, the script is said to be undervalued, right? If intrinsic value is perceived to be less than the market value, the script is said to be overvalued। यही हमने समझा हुआ एग्जाम्पल में। The goal of investment strategy is to buy undervalued shares and sell overvalued ones, but it remains tough to make this evaluation correctly and consistently, as what is being priced is the unknown future of the company, right? But it's remained tough to make this evaluation correctly and consistently, and what is being priced is the unknown future of the company, because price is the unknown future. कोई predict नहीं कर सकता क्या price होगा उसका future में. चलिए, बट एक बार हम इसको भी चैट जीपीटी की मदद से समझ सकते, हो सकता है इसमें और कुछ वैल्यूएबल इंसाइट्स को ऐड करके हमें बताए. चलिए, think of it like shopping at a clearance sale, undervalued share. Imagine you find a high quality jacket, okay, that would normally cost 5,000. Its intrinsic value based on its material, brand, and durability. Buy it on sale, but it is on sale for 3,000. Its market price, the jacket is undervalued, so it's a great deal, and you would buy it because you believe its worth is higher than its price. Undervalued share क्या होते हैं? Now imagine a simple jacket priced at 7,000, its market price, even though it's worth only 5,000, its intrinsic value. The jacket is overvalued, so you avoid buying it because it costs more than its worth. In the stock market, when a company's market value, that is current stock price, is less than its intrinsic value, the stock is undervalued. Example, a company's shares are trading at 50, but based on its strong growth potential, analysts calculated intrinsic value to be 70. Investors see this as good opportunity to buy because the stock has room to grow. Second case, when a company's market value is more than the intrinsic value, the stock is overvalued. Example, a stock is trading at 100, but analyst believes its intrinsic value is only 80. Investor might consider selling it, expecting the price to drop. चैलेंज क्या आता है इसमें? Predicting intrinsic value is not easy because it's involved estimating the future potential of the company. Factors like market trends, competitions, and unexpected event make this difficult. Just like it hard to guess for long the jacket will stay in fashion, right? It's tough to predict how a company will perform in the future. That's why successful investing requires research, judgment, and bit of luck. So yeah, that's paragraph. Next thing is equity investing requires identifying and exploiting inefficiencies and is most amenable to mathematical formulation. Okay, qualitative factors that assess future potential of a company based on factors such as quality of management, marketing strategy, financing capability, and such make equity investing as an art as well as science. Stock market, where these estimates are made and acted upon through buying and selling of equity shares, feature a social ecosystem of complex human behavior. Investment decisions are influenced by behavioral and cognitive limitations of individuals acting in a group. तो एक बार हम इसको लेमन लैंग्वेज में समझ लेते हैं. चलिए, so equity investing is like trying to predict the winner of a cooking competition where the dishes are not ready yet. You have to guess based on what the chefs and companies are doing behind the scene. Why it is an art and a science, you analyze facts and numbers like the chef's recipes, ingredients, and cooking techniques, financial reports, revenues, and strategy. This is a logical, measurable part. Art, you also evaluate things that are harder to measure, like the chef's experience, creativity, or how well they manage time, a company's leadership, marketing, and innovation. This requires institution and judgment. Okay, example. Imagine you want to invest in a restaurant chain stock. Scientific side, you look at their profit and growth over the years, market trends in the restaurant industry, the chain ability to raise funds for expansion. Artistic side, you also consider the reputation of the management team, how innovative their menus is compared to competitors, whether they have a solid marketing strategy to attract customers. You combine these insights to decide if the restaurant chain has a bright future. Stock markets as a social ecosystem. Stock market aren't just about numbers. They are shaped by people's decisions, emotions, and behavior. Investor reacts to news, trends, and even rumors, creating a mix of logic and emotion. Example: positive behavior. If many investors believe a company will succeed, they buy its shares, pushing the price up. Negative behavior. If there's a bad news or fear in the market, people may sell it in a panic even if the company is still strong. Challenges in investing. Investing isn't just about facts, it's about predicting how people will react to those facts. Example: a company might report lower than expected profits, but if investor believes it's a one-time issue and trusts the management, the stock price might stay stable or even rise. So investing is like solving a puzzle with both logic and creativity, while understanding the human behavior adds complexity. चलिए, तो ये हो चुका है दोनों का डिफरेंस। अब हम आगे बढ़ते हैं। अब हम जानने वाले हैं व्हाट इज़ मार्केट कैपिटलाइजेशन। मार्केट कैपिटलाइजेशन का सिंपल मीनिंग ये होता है, जैसे रिलायंस इंडस्ट्रीज हो कि 20 लाख करोड़ का उसका मार्केट कैप है। मतलब अगर मुझे रिलायंस को पूरा का पूरा खरीदना है, मुझे 20 लाख करोड़ पे करना होगा, तब जा करके मैं रिलायंस को खरीद सकता हूँ। और ये 20 लाख करोड़ आया कैसे? यानी रिलायंस के जितने भी शेयर्स हैं, मल्टीप्लाई कर देंगे उसको करंट मार्केट प्राइस से, तो निकल करके आएगी उस कंपनी की मार्केट वैल्यू। चलो, but the market capitalization, market cap, is the amount of money required to buy an entire company at its current market price. Okay, जो मैंने बताया, it is computed as the market price per share of the company multiplied by total number of outstanding share, right? Example: a market cap, which a company which has issued 1 lakh shares and currently traded at rupees 20. So current market price would have market cap of rupees 20 lakh, यानी कि 1 लाख शेयर मल्टीप्लाई बाय 20 जो उसका करंट मार्केट प्राइस है. विच चेंज इन इक्विटी प्राइस, मार्केट कैपिटलाइजेशन ऑफ द कंपनी चेंज कंटिन्यूसली. ट्रेडेड स्टॉक्स आर ऑफन कैटेगराइज्ड बाय मार्केट कैप्स. ब्लू चिप स्टॉक्स क्या होते हैं? Blue chip stock represent the largest company by market cap. Given the given the large size of their market cap, they attract large set of investors, both retail and institutional, and enjoy a high level of liquidity. They are also called large cap stocks. Mid cap stocks that refer to those companies which enjoy a good level of liquidity but are medium in terms of market cap size. Small cap stocks are those stocks that are smaller in size and therefore do not enjoy much liquidity. There is no specific size for the out of there is no specific size for the cutoff of large, mid, or small cap stocks. It is therefore common to consider the top 50 or 100 stocks by market capitalization large cap, next 200 to 500 stocks as mid cap, and the remaining as a small cap stocks. Market cap is also used as an indicator of the size and importance of the stock market of a country. The ratio of market cap to GDP of a country's relevant measures for the purpose. चलिए, हम इसको यहाँ से इस चीज़ को और लेमन लैंग्वेज में समझते विद एग्जांपल. ऐसे कुछ ना कुछ ऐड ऑन करके हमारे इन्फॉर्मेशन को इंक्रीज करेगा, एंड आई वांट दैट कि इन्फॉर्मेशन हमारी नॉलेज इंक्रीज हो. चलिए शुरू. Think of a company in the stock market like different sized stores in a mall. एक मॉल आप इमेजिन किया, उसमें डिफरेंट साइज के स्टोर होते हैं, राइट? Their size is measured by market capitalization, market cap, which is total value of the company shares in the stock market. What is market cap? Market cap is equals to share price multiplied by total number of shares. Now, just like stores in the market, stores in a mall vary in size. Companies in the stock market are categorized into large cap, mid cap, and small cap based on their market cap. Categories of stock: blue chip or large cap stocks. These are the big stores in the mall, like popular supermarket chain or branded outlets. They are well known, stable, and trusted by both small and big REIT institutional investors. Example: think of a company like TCS or Reliance Industries in India. Why invest? They are less risky because they are established and have steady cash flow. Mid cap stocks. These are the medium sized stores in the market, in the mall. They are successfully but not as massive as a big store, right? They have room to grow and may become large cap companies in the future. Example: think of companies like Page Industries, Jockey, or PVR Cinemas. Why invest? They offer a balance of growth potential and stability. Small cap stocks. They are small shops in a mall, like local or niche stores. They are smaller, riskier, and less liquid, means it's harder to buy or sell their shares quickly. Example: think of shares known companies, think of less known companies or startups. Why invest? They can grow quickly and even and give high returns but come with a high risk. Market cap and a country's economy. Market cap reflects how big and value the entire stock market is. To compare, we use market cap to GDP ratio. So market cap to GDP ratio equals to total value of all stock divided by GDP of the country. Example: if the total value of all companies stocks in a country is 100 lakh crore and the GDP of the country is 200 lakh crore rupees, okay, the market cap to GDP ratio is 50%. A higher ratio means the stock market is a bigger part of the economy, while a lower ratio means it's smaller. Investors use this ratio to gauge whether the market is undervalued or overvalued in relation to the country's economy. What is the current market cap to GDP ratio? What is the current market cap to GDP ratio in December 2024? इन इंडिया भाई साहब कौन सी कंट्री का दिखा रहे हो? As on December 2024, India market cap to GDP ratio is approximately 108.36%, suggesting that the stock market is most modestly overvalued. This measures indicate the total value of the stock market compared to the size of the country's economy in India. In India, the ratio has fluctuated between a 10 years maximum of 119, 119.68% and a minimum of 58.03, reflecting the dynamic nature of economic growth and stock market valuation. The ratio is useful tool for investors to assess market condition. Above 100%, the market may be overvalued. Below 100%, the market may be undervalued. In context, a high ratio is not uncommon due to its growing economy and variable equity market. Okay, market cap to GDP ratio. तो बेसिकली इसका क्या फॉर्मूला था? टोटल वैल्यू ऑफ ऑल स्टॉक्स एंड जीडीपी ऑफ द कंट्री. टोटल इसको भी हम फाइंड आउट कर लेते हैं ना गाइस एक बार. As of December 2024, the total value of all stock in India is estimated to around 3 lakh 325 lakh crore. As the GDP of India is approximately 300 lakh crore. This yield as market cap to GDP ratio is about 108.36. Stock market value represent the combined market capitalization of all listed companies on Indian Stock Exchange, primarily the BSE and the NSE. Gross domestic product measures the total economic output of the country. This ratio highlights the relatively size of the stock market compared to the economy, and it's often used as calculate whether the market overvalued or undervalued. So slightly overvalued है अपना market अभी. चलिए, सो गाइस, नेक्स्ट वीडियो में हम जानने वाले हैं व्हाट इज़ एंटरप्राइज वैल्यू। तो आज हमने मार्केट कैपिटलाइजेशन एंड मार्केट वैल्यू, इंट्रिंसिक वैल्यू का डिफरेंस देखा है। तो कुछ भी डाउट हो अगर आपको, प्लीज़ लेट अस नो इन द कमेंट सेक्शन। थैंक यू सो मच फॉर योर टाइम।